Look, getting started in tax strategies is hard because we've been programmed to believe that the IRS is an 800-pound gorilla. One wrong move and you're toast. 80,000 IRS agents are trained to enforce punishment, and it's a big deterrent for most people just to submit and pay their taxes. On top of that, the tax code is written in a way so complicated it makes college textbooks look like children's books. So those of us who do try to read it end up feeling like we need an expert to interpret it to safely take advantage of the tax benefits inside it. If I handed you the tax code right now, you would have no idea where to start. It has 2.6 million words in it. To put that in perspective, you would need 4 hours a day of reading it for an entire year just to read through it all, let alone comprehend it, so no wonder it's overwhelming. Tax strategies are confusing because of the way they're written, because it's hard to understand. In reality, these tax strategies can be broken down into simple, easy to follow steps. Look, the tax code is 85% about how to set up and collect taxes on passive investments, on multiple partnerships, on things that do not involve W-2 people. The majority of it is not meant for the common man. It's about advanced strategies. And the reality is there's a huge proponent in Washington that lobbies on behalf of large mega corporations like Microsoft, like Disney, like Google, all of these that are building in tax codes with every revision that allow for massive savings. The problem is the tax code is written in a way of if you do this, you will pay this tax. The reality is you've got to read that in reverse. If you do this, the outcome will be paying less tax. But the code isn't written that way. It says if these are the circumstances that happened, if you bought a piece of real estate and it appreciated, you will pay a passive income tax on those gains. That's how the code's written. What it doesn't say is for advice on how to not pay those, refer to section 1031, where we show you how to buy an additional property with those proceeds and eliminate taxes for now. Those are the kind of things that are not in the tax code. And so understanding it and interpreting it is very, very different and very difficult and takes a special kind of thinking to look at it and say, the tax code says this, I want to do that. How do I structure it so that it falls in line with the tax code and allows me to have those benefits? That's strategy, and that's what I love doing most. Let's look at another very simple strategy that you could use that would take you a little bit of effort but give you a huge return. Let's take this whole idea of travel. Let's say you want to go to Disney World and you want to take advantage of that. You're also a real estate investor. One of the ways that you can do that is by booking your plane ticket to and from Florida in your business name. While you're in Florida, you take a tour of a timeshare, you look at a couple of real estate properties, you do those kinds of things. Now your travel and your business expenses during that period of time are paid for. Now, while you're there, you're just going to take the family to Disneyland on your own nickel, but at least half of the cost of going there has been offset with a simple strategy of making business expenses business and personal expenses personal. By dividing those up and accounting for them and documenting what you did each time, the business cards, the tours, the things that you did that really work in your real estate business can be done in a way that makes sense in the tax code. And it doesn't have to be real estate business. Let's say you're in the screen printing business. You're going to look for manufacturers, suppliers, things like that that are in the area of where you're traveling to, meet with them, spend a half a day, and get all of that travel reimbursed to you as a business expense. It's going to save you a massive amount of taxes. There are so many legal ways to reduce your taxes that are misunderstood or overlooked, and your future wealth pays the consequence. Many people never get started because they are afraid. They're afraid that the IRS will come after them over a mistake or a misunderstanding, so they never try, and they stay stuck paying taxes that are growing bigger and bigger every year. See, I used to be like most people. I let my accountant handle all the paperwork thinking they were taking care of everything, including strategy. But here's the problem. Their job isn't to help you keep the money you've earned. Their job is to account for it. That's why they're called accountants, and report back to the IRS. Not to discredit accountants in any way. Their work that they do is very important, but they are not tax strategists, and it's not fair to put the expectation on them that they are experts in strategy when they're not. I'll tell you about one of the very first things that I did. It was my first deal, actually. I bought a piece of property next door to a project I was building. I was able to rezone the property. I got it sold to another user, and I made about 2 years' wages at that time by doing this. My problem was, because I did not hold the property for 366 days, I had to pay ordinary income tax on that. If I would have assigned a short lease to the customer with an option to purchase on it after a certain number of days, I could have taken and reduced my taxes by 18% just by knowing that thing. See, if you hold something for more than 366 days, it's considered long-term capital gains, which is only taxed at 20%, rather than short-term, which is your ordinary income rate. So by not knowing that, I paid 18% more on this $85,000 than I needed to. That's massive. The other thing that I could have done is if I had taken and assigned more improvements to the property and done those instead of handled those outside the contract, I would have reduced my basis and been able to apply that basis to the sales price and had that happen. Instead, I did that outside the contract, creating additional income instead of expense to the property and selling it at a little bit higher price, but having that come through as an offset. So by not doing those two things, I literally cost myself another 30% on the profit that I made that I didn't know. Now, when I took this to my accountant, they didn't realize that either. They just said, oh, congratulations, you sold this property, you made good money, here's the taxes that you owe. It wasn't until 4 or 5 years later that I realized this, and it made me sick. Because when I look at how I've bootstrapped my companies and how I've built something from literally nothing, another 30 grand would have made a huge difference in my trajectory. And I realized that they could have implemented these strategies, but I no longer had the opportunity because I didn't have the proper structure set up before. I hadn't had the conversations before. And the end of the story is I thought my accountant was doing it because I thought they were my guide, and they simply weren't. So this is why it's so important to have a strategist. Not just any strategist, but someone who can translate the tax code into simple steps that you can understand. And it's not scary to do something new when you know what the outcome will be. Here's another tax strategy that a lot of people use, but I think in the wrong way. The tax code says that if you're buying a vehicle over 6,000 pounds, then you can depreciate that vehicle using Section 179 at an accelerated pace. So a lot of people go out every year and they buy themselves a new F-350 or a new Suburban for mama, whatever it is, but then they become the payee of that asset. And I've taken that to a little different level because I've used that same tax code to buy Bitcoin miners, depreciate them through Section 179 while mining Bitcoin. I've used that to purchase airplanes that I then lease out. So now I have a lease that's returning to me a profit, and I've used Section 179 to depreciate that asset. I've watched people do that with motorhomes and then lease the motorhome out. I've watched people do that with Airbnb properties and write off all of the improvements as a tax-free investment at this point in time. So there's a lot of ways to do this that show you a better way of using the same tax code that you may have not understood the full reality of what it can do in your tax life. Look, I want to assure you that these strategies are safe and they're legal. The reality is the government cannot engage in commerce. So what they do is they incentivize people to make these purchases, to put these goods and services into practice so that others can utilize them and create more revenue. Then you're paying a use tax, you're paying lodging taxes, you're paying all those different kinds of taxes, but you're doing it out of revenue. And because of these experiences over the last 30 years, going to seminars, classes, working one-on-one with several experts and mentors, I know this stuff inside and out. And I've taken everything that I've learned from them and I've used them in my own investing life. This is the part most people don't realize. Saving on their taxes is the fastest and easiest way to create investable income. You don't need to work harder. You need to use strategies that allow you to keep your money that you've already earned, and when you can minimize your tax return, you can then invest that and make a 3x on it. These are the things that people don't understand. So by adding 10% more effort, you're able to get more money. And when you're able to keep more of your own money, then you're able to reinvest it in other income-generating assets. Imagine growing your wealth without adding more work to your plate, more hours to your day. This is the key to staying ahead of inflation and gaining financial freedom like the intelligent investors. So let me ask you this. If you were able to save $60,000 on your taxes by making an investment that you like anyway, what would you do with that money? My guess is you're going to reinvest that. Now you have an additional $60,000 at work in the markets, making you an average of 6 to 15%. What if you did that for 10 years in a row? You've now got $1 million working for you that you didn't have, not because you worked any harder, but you worked smarter. This is exactly what the Intelligent Investor Framework is designed to do for every single client. So if you want a more detailed explanation of the Intelligent Investor Framework, I've created an hour-long video that's linked below where I explain exactly what this strategy is, how it works, and what it looks like with real-life examples that you can apply today. So click the link below.